This week on CrunchWeek, we're talking about Microsoft's launch of the Surface 2, Blackberry possibly going private, and the end of the general solicitation ban on startups and VCs. Hi, welcome to CrunchWeek. I'm Leena Rao.
I'm Colleen Taylor.
And I'm Alex.
Welcome, Alex. It's your first CrunchWeek. We're super excited to have you here.
It's really cool. I feel like I've joined the upper class of TechCrunch writers now. Like,
yeah.
I think I walk with my head held high at the office.
So obviously, like a huge week for news. You covered the launch of Microsoft's tablet, a new version of their tablet, the Surface 2. What'd you think? Is it a buy or a?
Well, it really depends. There's two devices. There's the Surface 2 and the Surface Pro 2. So you have a pretty wide price differential there, from $449 all the way up to like $1,800 for like the highest end device. So it really depends on what device you're talking about. But for the average consumer, the Surface 2, which is the successor to the Surface RT, is a pretty cool device. The hardware is really neat. From a design perspective, it's great. The question is Windows 8.1 better enough than Windows 8 to make the experience, the actual software experience, good on a day-to-day basis? And that's kind of an unanswered question. But the hardware itself, I definitely really liked.
Has Microsoft released numbers of how many Surfaces they have ever sold since that first launch?
They've released two numbers. One was revenue for fiscal 2013, and one was their loss on Surface for fiscal 2013. And the loss was bigger than the revenue, so it was a rough start for the product line. They got slapped pretty hard in the face.
I feel like when a product doesn't do well out the gate, it's kind of hard to make up for that loss of momentum.
Yeah. And the same weakness you saw in Surface Generation 1, you saw in Windows 8 itself. So they're definitely linked. If either is better, it helps the other one, because they both act as conduits for one another. But I think the hardware is good. And the Surface Pro 2, for example, to bring that in, is like the Surface Pro with much better battery life. So I see that actually performing pretty well in corporate environments, but they're not price conscious, and they're already stuck on Windows devices to begin with. So it kind of fits into that niche pretty well. The Surface 2, the consumer-facing device, is the real question.
Do you think it has any chance of competing with the iPad?
I mean, I'll just put it like this. I own an iPad. I've had an iPad since the first generation, and I guess I like the device. It's great to hold. It's nice to use. I never use it. I do use my Surface tablets on the occasion.
What do you use it for?
Last case was I was monitoring a panel down in the mission, and I wanted Word, because I didn't think I'd have Wi-Fi, so I wanted a document. And so I just grabbed my Surface RT, charged it up, typed on that in my lift all the way there, and had my document ready to go. So there are some use cases for it. I mean, not us. We have these that we use.
Right. I mean, and that's like the corporate angle that I think you pointed out. That could be a good, use case for the Surface, because the if you do want to have access to things like Word and like your whole suite of Microsoft Office, then Surface the Pro could be a good option for companies.
Yeah, but I think the Surface 2 is now really aimed at students, because it comes with Office, so you have all that kind of built in, and then they've also baked in, with the new versions, a bunch of free online storage and free improved Skype. So if you're a student, you want to store crap, talk to people, and type. And the Surface 2 does all three of those things, I think, pretty well. At a price point that's not too high. $449 for the device is, I think, pretty reasonable for students in this day and age.
Yeah, I mean, I think you're going to spend that on an iPad, right? Or more, but like an iPad Mini maybe.
You can't do anything on an iPad Mini except for not watch pornography. So like,
it's true.
Steve Jobs joke there. Sorry, I couldn't help myself.
Right. But speaking of like devices that you have when you're a corporate person, Blackberry.
Yes.
The device known for being used by financial people and business people kind of came to like a rough end this week, or started to come to its end.
Yeah, news emerged that there had been a buyout offer to take the company private.
At $9 a share?
At $9 a share, which would be around $4.7 billion, right?
Yeah.
And it was trading, I guess, this week, sometimes below 8, sometimes a little bit above. I don't think it ever reached 9.
The day that the $9 per deal was announced, it was trading at $8.23 before trading was halted. So it was less than a 10% premium over its trading stock price, which is pretty slim for a buyout. I could see investors getting pretty pissy about that.
Yeah, I mean, I just feel that it's a long-term sort of bet. It's not. I mean, what do you think? Like the person. The group was actually a previous investor in Blackberry, right?
Yeah, they own 10% of the company.
Yeah, so it's not like, I mean, they have a stake already, but and they still haven't gotten the financial backing to take it over, so it's unclear whether they'll get that.
Yeah.
But I am really curious, like, do they have a long-term view of the company, or are they just going to turn it around to sell it?
Well, they claim to have a long-term view for the company. In
Yeah.
their press release, they said, this is the new chapter of BlackBerry, the salvation of the company. But, BlackBerry has valuable IP, and it has $2.8 billion in cash and equivalents.
That's
and
right.
they're buying it for $4.7. So the business itself is being valued at what, like $500 million? I mean, it's a pretty embarrassing.
Which is so sad,
So
considering like you think of companies like Uber and
Oh, it's gotta hurt.
I mean, even like Snapchat being valued at $1 billion. I mean,
Well, that's insane.
That's also
That's
insane.
completely insane.
but like
Yeah.
you see all these other companies that have valuations that are very close to BlackBerry. You think about what the company was; it's depressing.
Yeah. Well, they're just not
Depressing
selling
for
like they
BlackBerry.
used to,
Yeah.
and they just had their earnings call, today or
Yeah.
yesterday, depending on when you're watching this. But they, are losing a lot of money.
Yeah.
Those devices just aren't selling like they used to. And one comment that I saw that wasn't in TechCrunch, but it was in New York Times Dealbook, they said, a BlackBerry is no longer a symbol of elite status, but rather one of professional indenture. And so it's a different thing now. People.
That's brilliant.
Isn't that great? Because
amazing.
it used to be something
It used
really
to be.
fancy, and then it's amazing how trends and habits and norms can change like that. And it's important for all companies to
Well, and
pay
it's sad
attention.
because there's an entire generation of people now that have iPhones that never really knew that value of BlackBerry, right?
Right.
Like they never were aware of the status that it had. So, and the other news this week concerning the company was that T-Mobile is no longer carrying BlackBerry devices in their retail operations. They're just going to have them online, which is like a huge blow. I mean,
Keeping them online is saving face for BlackBerry. It's a complete
Yeah.
repudiation of their partnership. I mean, they're going to sell, 8 more Z10s online than they've sold so far?
that's right.
It's zero. But look at the numbers. They lost $1 billion, essentially, on $1.6 billion in revenue. That is absolutely ludicrous. It's like a negative 40% net margin.
Yeah.
Yeah.
That does not work out
I mean, and
long
they're
term.
cutting back their devices, and that was part of the news, right? That they're cutting some
If you
devices
circle all the
back.
wagons, but you only have 2 wagons, you can't really circle.
Well, now, and they also
TP.
said that they're thinking through like other business like pursuits, right? Like one of them was like providing enterprise mobile security, which I read. But I was like, Lookout does that, right? And many others. So like they're actually kind of
And
going
who's
to
going
be
to sign
late
a
to the
big
game.
contract with a company in this much trouble? Who goes, oh, they're circling the drain. I'll pick them as my new service provider for
Yeah.
security, which is
Yeah.
a totally easy thing to do, right?
Yeah, well, they have the patents on a lot of great securities so other people can't just replicate them. But I think that's really where the value is here.
And that's
Well,
why
we
Fairfax is
will
buying them.
see,
I
yeah.
think they're buying them for the IP.
We
Yeah,
will see.
absolutely.
Yeah, for
Yeah.
sure. Well, other news this week, the ban on general solicitation was lifted by the SEC. So that means,
Champagne.
yeah, I guess startups and investors too who are raising money can actually now talk about when they're raising money and solicit funds from people, which has this big effect on, crowdfunding sites, and then of course there's the Angel Syndicate launch this week as well. So what do you think about it, Colleen? I know you had, been thinking about that topic.
I think that we had all been unsure as to how this would really change, come this past Monday, what would really be different. But for so long, the ban on general solicitation has really impacted the way that business is done, especially startups in Silicon Valley, like demo days, these
Right.
like clubby, inclusive things, because people were prohibited from saying very publicly that they were raising money. And now that doesn't
Right.
matter anymore. Tim Ferriss can go on his website and talk about all the
That's
investments
right.
he's making.
Yeah.
And it's been fun these past few days to see, the
How things are changing.
yeah, because I kind of wondered, and I've talked to some people who were wondering if people were still going to be a little hush-hush about when they're raising, just because maybe it'd be viewed as kind of tacky or something, but,
Or a sign of weakness.
or that you need to
Right.
say, because you can't already get the people.
But I mean, we all know CEOs, and we talk to them, and we just sit there and have drinks, and they're like, "Yes, we're raising around right now." Like it's off the record chat, but
Yeah.
like we get told this stuff.
Yeah,
now
that's right.
they can put it on bumper stickers.
That's right.
I mean,
Or
I
tweet
think,
about it.
God, it's gonna be so bad. There's gonna be so much more dumb money now just spiraling around at a time in which we need less dumb money spiraling around the valley. I mean, people that have a personal brand are gonna be able to use that to solicit funds.
That's absolutely right.
And people are gonna get burned.
Yeah, well, and you're
the
going to
good
see
news-
angel investors start doing that way more, I'd say, especially at the early stage, right when there's no data to kind of back things up, and they want to get more, money into the company.
Yeah, people can create syndicates and things. And so, but the good news is that with the Jobs Act, the general solicitation ban has lifted, but the change to accredited investors hasn't happened yet.
Right.
Crowdfunding isn't out there yet, so we can't have, a lot of, like you said, dumb money,
There's a lot of dumb money already.
There is. It doesn't matter if you're already, you can be a dumb accredited investor, but,
That's easy. That's really easy.
But that means you also have to be a millionaire and have,
That part's harder.
a lot more assets and stuff, so that, regular people can't get fleeced and lose all their money because Tim Ferriss, gave them a bad tip on an investment. So, this stuff is happening slowly, but, it'll be interesting to see how things are different, a couple of years from now, if all these things stay in effect, or if they feel like they have to then change regulations again if we do see bad stuff.
There's going to be some bad deals made that are going to be straight value add fodder, but I'm more curious about the overall mean or average of these solicited funds and if they are effective. My guess is no. That's my hunch, but I'm pessimistic and a cynic, so
yeah.
See how the market bears
So you
out.
still think that the old names, like the strong reputations, are still going to be
they're often
important?
bad too. I mean, Kaufman did a great thing on VC returns compared to the market over a 10 or 15 year period, and they proved they were actually not as good. So I mean, the money is still stupid.
Yeah, that's
not
right.
everyone is Andreessen Horowitz right now for their entire life. You know what I mean?
Right.
So,
Right, and there's going to be a huge shift, I think, on the returns that we're going to see from the companies that have been invested in the past 10 years, and how they're doing, and if they're going to be successful. I mean, we've got a lot of companies going public in the next year, and it will be really interesting to see, who benefits and who comes out strong with those companies. Twitter, of course, one of them, but Box, Zendesk, New Relic. I mean, a lot of enterprise companies. So
it's going to be a really fun year financially.
it is. Well, that's a good way to end. Thank you so much for joining us this week.